Wall Street likes to say, as January goes, so goes the rest of the year. And with the soaring markets that we saw in January, a lot of people figured we would have the same in February. However, that was not the case. We have the Dow Jones Industrial Average was down 4% for the month of February. It's now down 1% for the year. S&P 500 was down 2.5% for the month, and the NASDAQ was down 1%. So what's going to happen for the rest of this year? Who knows? But we're here to try to answer it and figure it out for you. Welcome, everyone, to Buy, Hold, Sell. I'm your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona.
I got a vest. It's freezing out here.
It is freezing. You're getting some, I guess, that snow that happened in Southern California as well. Yeah. But we have a very special guest from a very cold climate. Nicole Middendorf is joining the show again from Prosperwell Financial, located in Minnetonka, Minnesota. Nicole, I have one question for you. This is the only thing I'm going to ask you for the whole show. Where is Minnetonka, Minnesota?
You haven't heard of Lake Minnetonka? You know, Prince?
Yeah,
I'm not familiar.
The song? You've never heard of Prince songs?
Oh, I heard of Prince, but I'm not familiar with the song. Well, that's right. He is from Minnesota. That's right.
Okay, well, the other thing, the Vikings got in trouble big time for a cruise that they had on Lake Minnetonka. So maybe that's what you... It's the most, in my opinion, the most gorgeous. It's the largest lake in the Twin Cities. And it's
okay.
Minnetonka, let me just cut to the chase here. Have you been to Beverly Hills, California? Okay.
Yes.
Oh, yeah.
Is Beverly Hills, Minnesota. And it's gorgeous.
Well, there's Wayzata, which is the city right next to Minnetonka, which is where I live, which supposedly I used to work at Morgan Stanley in Wayzata, and when I was there, they talked about it was like the number 4, like top, like per capita or per person or something wealthiest community. And I don't know if it still is, but yeah.
Well, it sounds like a place. It definitely sounds like Toby's type of place, and I'm sure he has one of his yachts, a USS Toby, on that lake as well. So Nicole, it's great to have you on the show because especially today we had Target, which is based in Minneapolis. They reported their quarterly earnings today. They surprised to the upside. Really got a lot of people a little bit nervous though, because here we're really expecting retailers to not do as well, only because we were hoping for a little bit of weakness for the consumer, and it's just not showing right now. What do you think, though? I mean, what are you telling your clients? I mean, I'm sure they have a lot of questions after a down month like we had in February. What do you think for at least for the next few months or the remaining part of this quarter?
Well, we're doing a lot of 4% 3-month CDs. So
makes sense.
I'm always an optimist. But we're doing a lot of 3-month CDs at 4%. And with Target, I mean, I feel like people are out shopping, but they're not necessarily buying. I was at the Mall of America with my son, and the place was packed.
Yeah.
But it was packed full of people, and they now we've had, unfortunately, too many shootings. They've now instituted a new security policy to get in there where you get patted down.
Yikes.
But the place was packed, but a lot of people didn't have bags.
Yeah.
And, Target, of course, you're going to go in with your list of 4 things that you plan on buying, and you walk out spending more because Target, those are more the necessities. So people feel like I see people are still buying stuff that they have to have, groceries, your supplies around the house. But at the Mall of America, they're not necessarily buying those extra things that they used to.
Yeah, and we got that out of Todd. We got that out of Lowe's. We got that out of Home Depot. We got it out of Walmart, et cetera, et cetera. Maybe I harp on this all the time, but people don't quite realize in the United States that close to 72% of people, households, live paycheck to paycheck, and one person gets laid off and it's an economic disaster. Then when service wages have gone up, over the last 6 months, which is, great for them, but their prices have gone up faster than even the wage inflation. So, yeah, I mean, that's a normal human instinct and behavior is to hunker down. We're not buying the $3 Celsius cans. We're staying with the Diet Coke for the $3 this thing costs. You can get 6 Coke, that sort of bit. And,
right.
That should be expected. It's the trade down. I look at more at Walmart coming out and saying, hey, gosh, our sales are up and our profit margins are down 20% because what they're basically is buying food. And the $100,000 income households that are shopping at Walmart for food. They're not walking out with, a brand new golf set or new clothes and so on and so forth.
Mm-hmm.
And that's natural, right? Because what do we know? I mean, all we know is the prices keep going up, and we know we have 10 jobs for every, 5 people available, but we're sort of peaked out, and the GDP and people who are price sensitive at the margin, they're
right. Well,
going
Target
down.
with the Target analyst call, they did bring that up, how they had more consumers that were buying from the grocery area, including the beauty area, but that other area where it's the coffee machines, maybe the carpets, some of the group down in Waco, I forget their names, that the Magnolia people, they have all the higher price items that are there, and people just don't have that discretionary income that they're spending. I think the issue though for a company like Target is mainly because they had discounted so much because of their excess inventory, and that really did help their earnings. They had 3 straight quarters of missing Wall Street estimates. They finally beat it, but I think a lot of those numbers that came in were from the excess inventory, and they had discounted it so much, but those revenues were coming in. But those margins are going to continue to be squeezed.
Yeah.
going into the rest of the year.
Obviously, Nicole doesn't spend much money on beauty products, but I do, and and you can't beat the makeup prices at the Target. It's just it's hard to beat. But
with their partnership with Ulta, like that, my daughter like just raves about that. So.
Yeah, and that's a winner for them, no doubt about it. And plus, it feeds into having drawing in consumers. And let's be honest here, the woman of the household tends to be the accountant of the household. So, whatever, if they're going to be the first ones to be dipping into that discretionary budget anyway, obviously they want to, take care of little Johnny and get him clothed, but I'm sure there's some extra dollars there, Toby. I'm sure this doesn't happen in your household, but in most households in America, I think
between the 3 houses on our cul-de-sac, I think Amazon just parks a truck here and and they hand off all the stuff, and then because I've seen 4, including me today, like 4 Amazon deliveries. I mean, that's the reverse of it. Also, that convenience is fantastic. Now, Target has, like Walmart, you can order online and go pick it up. Well, shit, I'm too lazy for that, man. I want freaking Amanda, the local, to come in. I know her personally. She can text me, even though they tell you they're coming. And you save ridiculous amount of money. And then if you get an Amazon card, you get a 5% kickback in cash money. So you sort of, it's the best of all worlds. Their problem is that their costs have escalated to the point that the gas, the driving, the electronics, yada yada yada, and wages and benefits have gone up faster. I mean, I'm saying that somebody, I can't remember, it was Paul Dale or someone who said that we're living in the post-pandemic weird economy, and it truly is. I've been talking today on other stuff about how, for instance, the 10-month moving average back to 1960 for the stock market. Once you get above that and stay above it for 5 trading days, that has been historically meaning that the bear market's over. And of course, we got close to it, and then we just fell back again today. But what I don't understand, and I don't think anybody should come up with some new matrix. How can you compare one period to another period when you had a global pandemic, World War III, China, the second largest economy, closed down for 3 years?
Yeah.
There's
the historical.
How do you compare?
Are just out the window. You can't do it. Then the other thing I found was interesting is that we created these new investors, and Nicole manages big money, but for the the FOMO, YOMO, and YOLO crew, we opened up 17 million accounts with the stimmy checks. And do you think they were going to be buying Target? Hell no. Remember, we had SPAC mania, we had reverse SPAC mania, we had a SPAC last week for a space company that went up 1,100%. So they're still out there.
Right. So
they got their hands handed to them.
lots of balls to juggle in the air, no doubt about it. So Nicole, do your clients, are they going to you? They're probably asking questions about the Fed. Everybody wants to know. This market is addicted to every move that the Fed makes, even the Fed speak. I mean, everything that's being spoken as far as giving us clues what they're planning to do. I mean, what do you tell your clients? I mean, are you saying that, okay, we might be seeing rate cuts by the end of the year? I know a lot of Wall Street experts are trying to tell us.
No,
this.
Nicole is too smart to say we're going to have a freaking rate cut in October because she doesn't smoke the crack that some of our investors are. Sorry.
Well, I want to ask Nicole.
You took the words right out of my mouth. No, I just got off a Zoom with a client actually, and it was funny because she's like, how long have we been working together? And I'm like, do you have to remind me? Because we started talking about in 1999, because she's got some cash sitting elsewhere. And I said, yeah, I remember in 1999, I had 7% CDs for 5 years, and no one wanted them.
Take it. Yeah.
Like no one wanted them. I had a handful of clients that did, and they like loved me, afterwards.
After, yes.
But yeah, but no one wanted them. And where this conversation came from is, she's like, where are rates? What are things going to happen? And we had sent out an email to all of our clients on Monday of this week of like, okay, here's the market. This is what's going on. I'm always an optimist, but like, things aren't looking that great. Please call us if you've got cash, because with these 4% CDs for just a short period of time, like, why would you not take advantage of that? And so that was the whole conversation that, I don't see rates dramatically going down. We're not, I hate to use the word stable, but we're not stable. And
Nicole, you make a great point. And it's been interesting over like the last 2 weeks to hear people say, if I buy a 6-month T-bill or a 1-year T-bill, like I have a client who, Annie from Syosset, New York, who is as conservative as you possibly can be. And she says, Tobin, we made all this money in the last 2-3 years. Why do I have 40% of my holdings in the 2-year bonds and then a little bit of preferred? It's just because you're guaranteed to get your money back that you put in. You're locking in 5.5% rate, and it's tax advantage. I mean, people forget that when you get to Treasury interest in particularly states like she's in, that you don't pay income tax on it. You defer tax on the after-tax return is more than the inflation rate, which is hardly ever happens. And the after-tax rate is certainly more than what we project, because I've been pretty strong in saying that 3,200 was sort of the bottom where earnings power and then rates. But to Nicole's point, do these investment managers, do they listen to the Fed? I mean, how many times can you read my lips? We're not moving to a 3% inflation. We can't do that. Otherwise, and this is my scientific term, Nicole, the bond market would shit the bed. Because all of a sudden now you'd say, all right, I don't know, these guys are out of control. So we're just going to sell bonds. And most people don't understand it. When you actually have more sellers than buyers in bonds, the interest rates go up. So now all of a sudden you have a negative feedback loop for more inflation, not less inflation, right? So that's not going to happen. So my number is now 6%, Todd. I mean, we've been at 5 to 5.25 to 5.5, but I'm now at 6% is the Fed funds rate.
Yeah.
China is coming back, and they've had 3 years of doing nothing. They're sitting on $1.4 trillion of household money. People who haven't spent much time in China don't quite realize it. In China, when you go to buy a house, you pay cash, the cash that you saved to buy a house. There's very few, and now they finally got all this money. They've been locked down. You couldn't do anything. So when those people start spending, when the businesses start spending, and then having a communist party rule the whole thing, the banks will go crazy. You're going to see a resurgence in China, and that's going to be inflationary to the United States and the EU. Because, by the way, they're going to buy a boatload of our oil and our natural gas and our LPG, all of which were long, all those tankers, Nicole, and we're only up 45% owning tankers at a 3 PE, paying 12 to 18% dividends.
Okay.
I wouldn't overthink this.
Well,
Market
the
down,
6%
tankers up.
Mark, that's right. Okay, I got that. And a 6% Fed funds target. I have to tell you, I'm not familiar with anybody on Wall Street that's come out with that high of a number. If they are, I mean, maybe they are. I just haven't heard from them, Toby. That's a hot take. That's what we call in show business a hot take, Toby. That was very good.
Well, I'm an analyst. I'm not in show business, Todd, but Dan Niles and I are very simpatico on this. And if you go to danniles.com, you can see his rationale on, which is pretty much as mine is. But the other thing, again, Nicole, is you have to handicap inflation. I'm looking at numbers today. Service wages are up 7.1% year over year, and they don't go down. They only go down in one way, when you have a recession. So unless somebody thinks we're going to have an actual real recession, interest rates are going to stay high because, they can't, robo print people. They can't 3D robo print workers. And as long as you're going to have 10 jobs for 5 people in labor force, there's only one way you can get to 2%, and that's to create a recession.
Well, let's leave it.
Let's leave
that. That's right. Your work is done here. Let's leave it at that block, because I want to follow up with that when we get back after the break with Nicole, wondering what her thoughts are about a possible recession. Because the last time you were on the show, Nicole, you were very, very optimistic, much more optimistic than Toby and I combined. So definitely want to get your thoughts on that.
Well, then she went to Mexico and got a tan, and now she's dour. I love it.
There you go. That's everybody in Minnesota's got to be crazy jealous of you right now. So that's awesome. So listen, we'll be right back with Nicole Middendorf from Prosperwell Financial. Please stick with us. We'll be back right after the break.
Buy, Hold, Sell Live, brought to you by Transformity Research.
Hi everyone, I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Welcome back to Buy, Hold, Sell. As we close out the month of February, we see the Dow Jones Industrial Average down 4% for the month. We're actually down at a loss. We're down 1% year to date. I'll tell you, 4 weeks ago, nobody would have expected that, but we'll see. Maybe better times will be ahead. Who knows? But we welcome back Nicole Middendorf from Prosperwell Financial. And Nicole, we've closed out the last block really talking about a little bit about the recession fears. You have the recession fears. You obviously have the higher interest rates that we have to worry about, whether we're going to have a soft landing, a hard landing, no landing. I mean, who knows what it is. Where do you stand on all of this? What are you telling your clients? Do you think soft, or where are you going with this?
Yeah, I mean, I don't feel very positive for this whole year. Like every time I turn around and I had 2 of them today. It's referrals of people in high paid positions that were laid off. And so, I feel like every time I turn around, there's more and more layoffs, and people are already feeling the pinches already when they're out shopping. You're feeling the pinches in anyone in the mortgage and real estate world is panicking like no tomorrow. And so that's where there's you have just this general fear, and fear is never a good emotion to live by, because that's, in my opinion, one of the great jobs of a financial advisor is to separate your emotions from your finances. But people are living in so much fear already. And the only thing that we have going for us is a few companies here and there having great earnings. Really. I don't you look at things internationally, you look at prices of things, you look at inflation, you look at where rates are, you look at the average consumer overspending, you add layoffs into that. That's not an R word.
Yeah, that's a bleak picture. I have to tell you.
I want to see if Nicole can frown, because even when she's giving bad news, she's smiling. It's like a pop drop.
But the thing with that is, because the last time you were on, you were very optimistic. It was like the markets are doing great with bear market rally, boom, boom, boom. And to reverse course makes me very nervous, because Toby and I turn to you for that optimistic side, and we're not getting it from you.
Yeah,
so that,
way to go, Nicole. Don't
That's
call us,
cause
we'll call
concern.
you.
That's cause for concern on our end. But last year, let me ask you about this, because last year you were very successful with the energy sector. The Dow Jones Oil and Gas Index was up 56% last year, just eye-popping numbers. It was the best performing sector on all of Wall Street. Toby, I know you're a big energy bull. I'm sure you still are for 2023. But Nicole, what do you think?
No, actually, I'm not, Todd.
Oh, you're not. Oh,
I mean,
well, please explain to the
Well, I mean,
audience.
two things. First off, since I'm twice as old as both of you, when Russia invaded Ukraine, and we knew that there'd be no more uranium exports, there'd be no more nitrogen, fertilizer, yada yada yada. We packed into that stuff, but particularly natural gas. Well, this is what I try to tell people all the time. If you bought like one of our energy trusts that's just natural gas, this is a trust that pays dividends. At that time, it was like 13%. And that trust, a little sleepy trust, goes up 300%. Or the natural gas EQT, which is the biggest natural gas play in the United States, goes up 250%. In 4 months, unless you're Kathy Wood and you don't understand how to sell things, you've made, the average, depending on how you do your math, is from 2010 to 2022, the QQQ went up 15% a year, and the average, S&P 500 was 10% a year. So let's just take those 10 years. Divide by 10, 300% on a natural gas stock, and you made 30 years of wealth in 4 months. And if you're still holding on to that, if you don't think that was an aberration of an aberration, then you have no business running your own money. You should have someone like this young lady call you up and say, "Hey, Tobe, those energy stocks that are up, 80%, and Oxy and Exxon and Chevron, the largest and the safest. We're going to trim some of that because you just made 10 years of wealth in 6 months. That is not usual." Now, am I putting words in your mouth, Nicole?
No, I mean, that's our philosophy. It's like buy, the whole goal is buy low, sell high. And so same thing, when we took a position in energy, that was the best phone call to make to clients is,
right.
Hey, we're going to take 50,000 off the table that you've made and put that into a 3-month CD, making you 4%. And absolutely, I mean, you want, if you take 10 grand, put it into something that turns 20, take your 10 grand off the table and do something else with it. It's the simple philosophy of what you're supposed to do on Vegas. It's the same thing of what you're supposed to do with your investing.
Well, Todd, here's one that I love that somebody wrote. So we always talk about alpha, the idea that you can outperform the market. There's even a website, Seeking Alpha, right?
Yeah.
But risk management is now the new alpha, because risk management would make you lower your risk, take those profits, build cash,
right?
And for 12 years, free money, quantitative easing all over the place, $6 trillion of money, all that. It's over, ladies and gentlemen. Look at my gigantic noggin. It's over. And you have to change your investment strategy. And by the way, my favorite other one this week was Steve Jobs said some very nice things about my old company, ChangeWave Research, about how we find, transformational change, right? Well, the other thing Steve Jobs used to say all the time was, hey, guess what, Toby? Strategy is figuring out what not to do. We always think about strategy as like what to do. But in essence, his thing was, I want to, when we came up with the iPhone, our strategy was to do the things we shouldn't do.
Yeah.
And right now, alpha, outperforming the market, requires active management, not just sitting around, I'm Warren Buffett and I'm going to, I'll never lose money. And that's a different regime. And I think over the year we've been doing this almost. I mean, it feels like 5 years, Todd, but I know it's almost a year. We've been saying it's a new day, it's a new regime. The last time we had 5% of federal rate hikes was when I started on Wall Street in 1980. And you don't invest the same way. And if you could get risk-free, like today we bought the 6-month T-bills and locked in 5.7%.
Yeah.
And
Yeah,
no
it's
risk,
golden.
you get your money
It's
back.
it's golden. It's definitely is. We had Bloomberg's Fernando Valle on yesterday. He's the senior oil and gas analyst at Bloomberg, and he came right out and said oil's down because of the economy. With this fear that we could be heading to really dark times for the U.S. economy, it's just taking a lot longer than I think a lot of strategists and economists had predicted. So, I mean, when you hear that, that says to me that that might be an area that we might want to rethink of. So, what about when Nicole, when your clients are coming to you, though? I mean, here you had this great trade last year. You know, success breeds more success. I mean, what are you telling them? Just look at those treasuries and just stick there, or you're thinking elsewhere?
I mean, right now, like I'm kind of in wait and see mode,
Okay.
reallocating, making sure that everyone's set from a protection planning standpoint. Like Tobin was saying, risk management is the game right now. As we get closer to the middle end of the year, that's where, I'll probably know a little bit more of like, okay, gosh, like, but it's not technology. It's not,
Yeah.
it's not energy. It's,
Yeah.
when you look at raising rate environments, like you're like, should I do some financials? But it's like, why would you do that? Like Tobin just said, when you can get over 5% for 6 months, like it's not worth the risk to try to roll the dice and pick something when there's just so much in the market, as you guys know, and everyone knows, doesn't like uncertainty. And there's so much uncertainty out there.
Yeah.
So let me
go
ahead,
add
Toby.
this though.
Go ahead.
The bullish story is Nicole, I recently sold my financial publishing company to a much larger company, and now I'm on Slack all day, by the way. And but in coming up with themes, etc., I go back to 2000 when I started Change Wave Research, and it was basically driven by the internet and internet stocks. I call that a Viagra chart, by the way. Just went crazy. So we sold them. And what did we do? The world had changed. China had just come in. We were in a bear market, 2000 to 2003. But shockingly, we made 25, 30% annual returns buying silly things called energy trusts and Canadian royalty trusts and so on and so forth. The strategy changes. Now, the other thing is you can make great money in a bear market because, to your point, the whole idea is to buy low and then sell high. And shockingly, it's not buy high and sell higher. And that's what, that's the buy the dip that worked for 12 years. But I'm excited about getting opportunities in real companies. AI, for instance, this crazy thing, the chat GPT, et cetera, don't get confused by that. The companies that are applying AI, this is going to be a $90 billion a year industry by 2025, 2026. It's now about a $30 billion industry. Where do those billions go now? They go to NVIDIA because they have the GPU chip that allows you to do this. It goes to the data center company that runs this. But now it's starting to matriculate, as all new technologies do, into other companies. We just bought a company I can't talk about because it's a microcap company. But they apply AI to warehouse picking. You're sitting there in your bob and you got to fill up your Amazon basket, et cetera. And they take you to the exact right places, and it cuts down time about 35%, which in the warehouse business is a big bit. It's just AI. So there's a lot of exciting things underneath the tempo here, but you can't fight the Fed, right? When it's going up. You can't fight the Fed when it's when their rates are going up.
Let's pivot off of that on the AI though, because that's a topic we could be on a show for 3 hours talking about this. So, but I do want to ask you this, Nicole, because Toby and we had Mitch Rochelle on the show last week, and Toby and Mitch really got into real estate, really talking about apartments and commercial real estate, which is a no-no, obviously. What's it like there in Minnesota, though? I mean, you still have a booming population. I mean, is the real estate sector, is it really bad? I mean, I know with the higher interest rates, it may be.
Yeah, it's bad. The mortgage brokers, we have lots of clients that are mortgage brokers and realtors, and they are all like panicking and hurting and pulling money from their accounts because they need it. I own a 9,000 square foot commercial building, And part of the building, part of upstairs, I've got a tenant in there that is a mortgage company that's moving out. So I have 8 offices. Where do you think I'm going to find someone in this kind of environment that needs 8 offices?
CrossCheck Media.
So I have people coming and giving me bids. I'm going to paint it, and fancy it up a little bit. And I am doing executive office suites.
Yeah.
And building out, and so did I ever think that I would become in the, WeWork world
I was
or
gonna say.
have another entity, helping other small businesses get going, or, providing people an opportunity to, if they're working at home, like to have that privacy. And that, we're seeing tons of commercial buildings becoming apartments because people really can't go and buy that house anymore. Because one, most of the time people don't have enough cash to put down. 2, the interest rates are so high. And then these commercial buildings, they're not, especially, unfortunately, downtown Minneapolis, like, the effects of George Floyd, like all of that stuff, like people do not want to be downtown, and they don't want to be in the city. So.
Hey, Nicole, I've always had a little thing that I've done with friends. I came from Southern California, and every other person I know was a mortgage broker, right, in Southern California. And then when I moved to DC, it was the same thing. Every guy at my golf club is a mortgage broker, right? Because things were ripping and it was great. And I always said, I remember Bob Pearsall. Bob Pearsall, look at me, write this down. The mortgage cycle goes up and the mortgage cycle goes down. What you want to do is put as much cash away as you can while it's ripping and you're making 50, 100 grand a month.
Yep.
Build that cash. And then when rates go up and all the other guys start picking up their office space and their mortgage brokers, you go in and that's how you grow your business. And Bob sold his company later to those big guys, Rocket Mortgage. And he went from 2 people to 400 people simply by following that tactic, which was don't believe your own bullshit. The freaking mortgage rates are going to go up, and houses don't go up forever. You reach a puke point, right? I'm just looking at this. Apartment rents fall as new wave of supply hits the, I guess my
It's blurry, Toby.
my blurry thing. Yeah.
Blurry.
I don't know which
I need
button
some
to
new
hit.
glasses.
Yeah, it's either I get this good look or I get blur. I don't know how to do both. But the stickiest part of inflation is shelter costs. The second stickiest part are service wages, since we have a 72% economy that's based on services. So that's why the people who are smoking the crack, thinking that somehow the Federal's going to start cutting rates in this October, don't understand that all of this inflation is year over year. It's not month by month. You do it year over year. That's how it works. You're going to get to this 6%-ish Fed, right? The market is going to come down as an index. Inside the sectors, you're going to find some very attractive opportunities that pay dividends. But I'm with Nicole. I'm 40 billion. We've been in a lot of cash for the last, since January 2022, and but we've made serious capital gains enough that our average return has been 20-30% because we took advantage of those crazy oil things, those crazy natural gas things, etc. But that's tactical, and it's not buy and hold, and just buying an index doesn't work. If you're in the same place everybody else, because when people all have to sell, Todd, they have to all sell from the same place too. And that's
you got that right. Yeah, that's absolutely true. So, all right. Well, Nicole, any final words before we close out the show today?
Did we bum you out, Nicole?
No, I would just say, I wish, Tobin, what you were talking about with mortgage brokers, packing away the cash, I wish the average American would do that too. When times are good, like, you need to make sure that you have that liquid money for those layoffs and those things that happen.
Yeah. Well, no one ever conceived of any layoffs. I mean, other than, in the pandemic, then we got, money from heaven. So it sort of took away from that. But in a contraction, and it's hard to have a recession when you have 10 jobs for every 5 people. Very hard.
Mm-hmm.
But
yeah, you're right about that.
What the Fed doesn't say, Todd, is that when they turn the camera off and the recorder off, is that the only way we could get to 2% inflation is to have a recession, particularly in service jobs. We have to destroy sort of 3 million jobs. By the way, did you see the numbers that 1.5 million kids 18 to 27 aren't working either? They're just in town playing, Call of Duty in their parents' basement.
Well, yeah, it's probably by choice then. Yeah, not my kids though. My kids are working.
Oh, your kids are getting scholarships for lacrosse. Oh my God.
There you go.
It's also things have changed. It's also things have changed too. Like kids are making money differently. Like kids are making money online and Instagram and Twitter
influencers and
I mean, my son, he makes money gaming. Like it's very different.
Well,
that's awesome.
That is amazing. We used to play chess. And we used to bet money on chess. That's how I made money in the gaming.
So Toby's an influencer. So
yeah, I'm just feeling old right now. Can we end this so I can go?
Absolutely. All right. Well, listen, Nicole, thank you so much for joining us. For the audience, go to prosperwell.com for more information on Nicole Middendorf and talk to her. And
or if you need an office near in the suburbs.
Or if you need an office, that's right. CrossCheck Media is moving to Minnesota. Pack your bags, Toby. Good stuff. So listen, on behalf of Tobin Smith and Nicole Middendorf, I am Todd Schoenberger. Thanks again for joining us today for Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
Hi everyone, I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Financial News TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember.
Oh, God.
Yeah, well, that does. I want you to, oh, my God. Fast-paced, no, oh, sorry.
Take one.
Fast-paced, no holds barred, in-your-face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.
Track, cue, dissolve.
Good morning and welcome
from Bigwig Studios.
From the Bigwig Media Studio.
Bigwig Media's broadcast center at the Willard is the ideal headquarters to host your virtual meetings and video conferences.
Kudos to our team who's running around behind the cameras.
What I liked about working with Bigwig Media was you guys are the experts.
Our industry pros have you covered. Let's get started.